How's it hanging? All right, let's jump on in. Today is Thursday, January the 22nd, and I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is roughly the same. I got back in a GDX I had gotten out of, and everything else should be basically the same as it was. Intel reported. That's the most interesting one by far because Intel has been on fire recently, along with all these semiconductors. Just look at Intel since this gap up back here on September 18th. And I don't remember what that caused that exactly. I'm assuming that was the government, when the government came out and took a stake, but I'm not 100% sure. Since then, it's just really continued. At the beginning of this year, starting the year off, I went long Intel at like $38. I think literally on the first, at the open, at the low, with a target of 43 on the trade, $4. Intel, in my mind, traditionally has always been a slow mover, so that felt like a really wide target. Looking for $5 of upside on Intel, and it obviously has vastly exceeded that. But I think you got to remember what my thesis was on why I got into it to begin with, because I think that my thesis on Intel in the beginning of the year is the reason for the performance. And the reason for the performance in Intel, I think, so far this year has less to do with the fundamentals of the business specifically and more to do with it as a hedge on Taiwan Semiconductors, especially with the Venezuela situation that happened with the United States. I think that, and again, this is why I bought it, and I think that this is what Intel's been moving on. But I think that the United States taking Venezuela actually increases the probability of China like invading Taiwan. And off of, if that were to happen, Intel then is, what we're going to need for chip manufacturing. And you can kind of read that a little bit also, I think, just with the fact that the United States even took a stake on it and with the fact that NVIDIA also took a stake in Intel. With that said, that type of that type of a thought process, or hedge, if you want to call it that, on a China-Taiwan situation doesn't improve the fundamentals of Intel today, right? So Intel now has had a huge move on the report, but Intel's been kind of a garbage company for a long time. I mean, this stock was the butt of many jokes here for probably like a few years, like this entire, like, for the most part, 2023. Improved a little bit in the beginning of 2024, but then immediately was back down, and all of late 24 and most of 2025, this has just been, the butt of many a joke, and for good reason, because the company, the fundamentals have just been absolute and utter trash. And then again, I'm pretty sure at this gap up here that has triggered this entire move, which was a gap up from $24 to $32 after a quick 3-day pullback. It hasn't looked back since, is from the United States taking a stake. And again, that's a hedge on the China-Taiwan situation that I think now has an increased probability since the United States took Venezuela. But I was of the opinion that Intel was going to trade down on its report and that the numbers weren't going to be great, which is proving to be accurate. And that was based on a twofold thought process. One is quite simply the move into the report, right? We talk about this all the time. When there's a really big move into a report, excuse me, when there's a really big move into a report, then there's a higher probability that good numbers are not going to be good enough for continuation. but two is I just kind of thought the numbers weren't going to be good even to begin with. I'm actually surprised that Intel's not down more right now. It is currently negating all of yesterday, and it's still very much in flux and moving. But those guidance numbers just don't look very good to me at all. And I'm actually surprised. I'm short some SMH, and I am short um, uh, SOXL into the report here. And I'm surprised that those aren't actually trading a little bit worse off of this report than they currently are. But let's see what happens when the dust actually settles on this thing. Turning things over to the market, we had a strong day today. We had a large gap up this morning. So the market gapped up, and the game plan in the morning meeting today was actually to look to short this gap up. We discussed in the morning meeting that yes, in theory, because we have completely tacoed on the tariffs on Northern Europe and the whole Greenland thing, that we should basically be immediately right back to where we were as of Friday's close, perhaps minus a little bit of a premium of some additional uncertainty and threats from the Danes to not include U.S. treasuries and equities in their pension funds anymore, so less a small premium. But the general idea was that there's some resistance here into the gap fill in this like 690 to 692 area, which again is the gap fill. And on top of that, we had a pretty large gap up this morning into that resistance. So first of all, even to begin with, common gaps, that's what this is called, today's type of gap, tend to have a higher probability of getting filled. And that's especially so when you have a gap up into resistance. So the game plan this morning was to basically look for the short in the beginning of the day, and then just see if the short turns into something more. And it was a pretty good off the open trade. We time corrected for like 12 minutes, and then we price corrected pretty hard, and that was a pretty decent trade. Particularly, the Qs worked better, and we were looking at again like semiconductors specifically kind of as a way to take advantage of that short idea, and that worked really well. We were looking at SanDisk and WDC and STX actually to be able to give kind of these big day 3 RDRs. And let me tell you, SanDisk still managed to basically close on highs today, which is so impressive. I am out of 95% of what I was short in SanDisk. I've got a very, very, very tiny short still on in SanDisk, even significantly smaller than I was short overnight last night, and it was a small position even last night. So I basically have like virtually no SanDisk left. It's almost like a little placeholder piece at this point. But that was a great opening down move. WDC was even better. Of course it was. STX was even better. Of course it was. Micron was another one that gave that sharp opening sell and then really fully reversed and really grinded higher. So great opening game plan I think for today. It worked out like really, really perfect. And then we just kind of went into this like, I don't know, midday today was so boring. And I don't know if it was just that after yesterday, which was like an insane trading session, today just felt boring, or if it actually was boring. It was just really boring. We put in that pivot low into this 21 EMA. It seemed like the market was trying to apply some downside pressure on it, but then we broke higher and we just kind of grinded up and went sideways for most of the day until we had a little bit of a roll down into the close. But what was interesting about this roll down is it really didn't impact, I thought, a lot of equities, at least not a lot of the equities that I'm involved in. Certainly not, SanDisk or Micron, which managed to be really, really strong still into their closes. So at the end of the day here for the market, I think big picture, not much has changed from yesterday. I would still kind of describe us neutral. If we're able to really get back above that 690 to 692 small time frame resistance from the gap fill, then I think that these SPYs get to back to being pretty much full on bullish. So I would describe the SPYs here as now as like neutral, or maybe you could say neutral bullish. And if we can recapture that level tomorrow or early next week, then we'd be back to full on bullish. So we'll see. That's our immediate short-term level to pay attention to, and then after that is all-time highs. And then on the downside, it's this week's low, and then still that December area I think is significant, is very significant if we were ever able to get down there, which doesn't really look like it's going to be happening. Qs are pretty much the exact same deal, more or less, working into the gap fill, finding a little bit of resistance there. And the IWM, which is our crazy beacon of relative strength, finally maybe giving a little bit of a topping tail today, giving a little bit of a shooting star. And did the IWM outperform again today? SPY's up 0.5, IWM up 0.75%. So I think today is the 14th trading session of the year, and the IWM has outperformed the S&P 14 out of 14 days so far this calendar year. I kind of think that streak is about to run into its end. Again, given the extension, given the shooting star, but also given where we're getting into in terms of now tomorrow will be January 23rd, and a lot of the January effect, which was incredibly strong this calendar year, and interestingly enough was not front run at all at the end of December like it usually is. I think that the January effect in and of itself might be running out of steam, which isn't to say that you still can't get good performance from the IWM, cyclicals, small caps, mid caps. I think that you actually still can, as we continue to pump the tax breaks that are going to come from the big beautiful bill and the depreciation and all the stimulus that we're pumping out right now from the United States. I do think that's going to benefit the IWM, but I think that we now, after a really, really strong start to the year, go into an environment that's going to be a little bit more of like an ebb and flow. Not necessarily where the IWM underperforms the SPYs and Qs like we're so used to, but maybe where it kind of matches the performance of the SPYs and Qs with a ton of dispersion. We go back to today, the Qs and Mag 7 caught a bid. Tomorrow, the IWM and cyclicals caught a bid, and kind of like back and forth, but net, I kind of think that the performance going forward on these might start to be a little bit similar. And today's candle might indicate that the IWM needs a little bit of a break. And if the Russell needs a little bit of a break, then we'll see if Microsoft catches a bid. And that was also part of today's thesis, was like the potential of a little bit of a pairs trade on like short semiconductors, especially in the beginning of the day, while maybe looking long for like some of these software names. How did Now perform today, just out of curiosity? Now had a nice bounce back. Microsoft catching a little bit of a bid today, showing a little bit of strength, still really extended to the downside. So I think that the game plan and the thesis, the thought process for the morning meeting today actually worked out pretty darn perfectly, and we had some very good calls in the beginning of the day, and then things just got really slow while we waited for Intel. And now that Intel's out, we will see where the dust settles on this thing. It's still above 50, not even into the EDMA on the daily, despite pretty weak-looking guidance as far as I'm concerned. But also some pretty positive commentary out of the CEO. We'll see where the dust settles on this, because if the semis can pull back, and they were getting kind of extreme here, that may have an impact on the Qs. Because on a lot of trading sessions so far this year, it has seemed like the semiconductors were the only thing that were holding up the Qs. Semiconductors plus Google. And now maybe if they lose the semiconductor bid, does that mean that the Qs weaken out? Or does it mean that you just kind of get some reversion where the semis weaken out, but again, Mag 7 catches a little bit of a bid, and therefore the Qs kind of continue the status quo of holding in. So we'll see. But that is pretty much all that I've got. I am, like always, happy to take a look at any thought processes or questions or anything like that that you guys may have. I think the first one I'm seeing here is from Tate. What's the best way to manage core size and risk so swing exposure doesn't bleed into intraday P&L, particularly when the tape risk is high? The challenge is building a real-time ratio framework between P&L and overnight exposure without oversized cores limiting flexibility, especially regarding how to size down cores and when to be aggressive when you think you're right. Let me try to take this piece by piece here. What is the best way to manage core size and risk so swing exposure doesn't bleed into intraday P&L particularly when the tape risk is high. When you say intraday P&L, are you meaning like your day trading P&L versus what you were holding overnight? Like you don't want your overnight stuff to be impacting your like intraday day trading stuff? Is that what you mean by the first part of the question? Give you a moment to respond. Cash flow versus swing risk. For me, it's kind of one and the same. So let me tackle what I originally thought you were asking, just because it's worth mentioning, and then let me tackle what apparently you're actually saying. Um, the first thing I would say, I don't let swing P&L impact day trading P&L. To the point where some traders, I don't do this because I don't want to pay for market data twice, but like Scott Rether is an example. He has multiple accounts. He's got a swing account, he's got a day trading account, maybe he's got an additional account that he uses more for options. I think Scott might run three or so different trading accounts, which means that he pays for three sets of market data. I get why he does that, right? It just can be more simple to have things be separated where you can clearly see, all right, these positions, these are my swing positions, these positions, these are my day trading positions, etc. I get that. I don't personally do that, mainly because I don't want to pay for two sets of market data, and also because I've just never felt the need to. I've always been able to just kind of separate things in my spreadsheets at the end of every day and in my head, and not really let them impact one another. So I try not to let it impact each other. I don't have a problem doing that all on one account, but some people, again, use multiple as a way to do that. As far as like cash flow versus swing risk, for me, a lot of times that's one and the same. The cash flow strategy that you see me doing a lot is on swing positions that I'm holding, where I have like a core swing position where I am a little bit bigger picture on it, waiting for it to play out, but also trading it back and forth on a day-to-day basis to try to generate some cash flow for myself while I wait for that bigger picture to play out. And we have gone through the math here in previous afternoon meetings, which you could probably find somewhere in Mike Reed's spreadsheet, where I've kind of discussed how you can utilize the cash that you generate from the cash flow to be able to like actually over time create a wider stop loss on the swing, where you risk the same amount that you were originally risking, but you actually can give it significantly more room, which can also be beneficial within kind of the confines of that strategy. So I hope that helps. Next part of your question, the challenge is building a real-time ratio framework between intraday P&L and overnight exposure without oversized cores limiting flexibility, especially regarding how to size down cores and when to be aggressive when you think that you're right. Yeah, I think we kind of covered that already. The one thing that I would add based on the second part of the question, I just forgot what I was going to say. Let me reread the question and maybe it'll come back to me. Without oversized cores limiting flexibility. I think that the only way that oversized cores limit flexibility is if it causes you to the overnight position to trigger like your maximum loss for the day, where you can actually, the system's not allowing you to trade. And if that were to happen, I think that you can just, I know what I do is I just request a one-time increase for the day because it was a swing position that is impacting the lockout, not me putting on dumb trades. So I think that covers your questions. Let me know if you got any additional follow-ups. But yeah, if you've got some sort of model or whatever, I could try to take a look at that as well. If T3 did, what is BNPL? I'm not sure what that stands for. Oh. Yeah, sure. Right, nothing else in the VTF for the moment. If you guys have anything else in there, please throw it in. Over on the YouTube, Scott on BE. I mean, BE still fully intact. The price correction in it today brought it down to nearly the 80 MA. This thing you can definitely still be swinging long, in my opinion, based on the technicals. I don't know where you're long from. That obviously matters. I do think that you need to be prepared that based on the spread between the 8 and 21 EMA, which is really widened out here, that this thing could easily price correct down to 130, where there's a previous pivot low, and still actually be healthy. So if I was swinging this, I would probably stick with it. It depends on your pricing though. Like if you have a high price on this, then probably you need to stop yourself out if this more immediate flag breaks. But if I had good pricing on it, I probably would be giving it still to this pivot low area down here at 130, which is around the midpoint between the 8 and 21 EMA, because it could easily pull back to 130 and still be a very healthy chart. From Giancarlo, what charting time frame do you use for the close starting around 2:33 p.m.? Still 5 and 15-minute charts in conjunction with the daily. Same thing as I'm using for most of the day. Also, could you give your thought on Tesla with robotaxi news that came out today? Sure. Tesla's just a meme stock. Unless I'm missing something on the news, the extent of the headline that I saw was that Tesla is finally going to be having their robotaxis in Austin actually not have drivers in them, similar to what Waymo has been doing for years at this point, and that they have plans to and then expand them to other cities. Tesla's a stupid stock. It's a meme stock. It doesn't move on anything except for hype and chatter. So none of that is new at all. They're still very behind on the robotaxi front. It's still going to be an ultra competitive space over time. And yet it was enough to rip the stock from 439 to 450 over old news that they're slowly catching up to the competitors that are ahead of them. So, as far as I'm concerned, it's a whole load of nonsense as far as what the news is. But when you're looking at a meme stock, which is what Tesla is, the most expensive meme stock in the history of markets, what matters is the price action. And the market interpreted that bullishly. If Tesla can clear, I think it's a zone between 450 and 460 on the upside, it's going to start to look pretty darn bullish again, technically. Up until today, this thing has been looking pretty bad ever since December 29th. Consistently relatively weak at the end of last year, the beginning of this year. There were some great short call-outs that we had on the way down. I don't like a new short in this here. I don't like the fact that it's back to the 450 to 460 resistance area. I also don't think it's a long at this point either. But again, if it really starts to clear through this 450, 460 zone and hold above and build out a chart pattern, then it becomes a technical long again. So for me, technically right now, today, without a doubt, really made this picture improve, but not to the point where I think it's viable, but improve enough where I don't think you want to be looking for a new short in this anytime soon. And again, the news is nonsense, but how many times have we seen Tesla move rapidly in huge ways on completely non-impactful news like what happened today? And the answer is many times. Jordan wants my thoughts on the Aussie dollar. I think that's what you're asking me. I have no thoughts on it. I don't trade currencies. I don't even have an ETF I can pull up to give you a chart on it. I don't know if anybody here on our team knows an ETF for the Aussie dollar that I could look at. I know that there was headlines in Pat's morning note this morning. I glossed over it because I honestly didn't care. Or no, actually, it might have been that Tate posted in the VTF earlier this morning, and I glossed over it because I honestly don't care, about probabilities increasing of a rate hike in Australia. I'm impressed that I even know that. You're okay. We can look at that too. But I don't know how that would impact the currency. As far as the metals go, look, these materials and metals have been such a hard trade to be on the other side of. Um, how did gold and silver close today? So gold is continuing after hours right now, and it's up 2.25%. Silver is also continuing after hours, but not as much as gold, but it's up 4%. Um, so silver outperformed gold again today. I thought that it was really interesting that 2 trading sessions ago, silver outperformed gold, but by a spread that was less than we were used to. And yesterday, gold actually outperformed silver for the first time in seemingly this entire up move. Um, so to me, that gave way to a thought process that I'm actually gonna. I'm expecting that gold is gonna start to perform better overall than silver after the huge move, and I think that that's because of what is causing the move. I think that silver has a lot more to do with just outright speculation, where gold has a lot more to do with the trade that we have discussed, where the concerns that come from the things that the president says in terms of alienating our allies and seeing countries like Denmark and Norway and other northern European countries so that they don't want to be buying treasuries in the same way anymore and they have nothing else to buy. I think that becomes a gold trade more than a silver trade. So I think that gold, if I had to be long one right now, gold or silver, I would choose gold. With that said, I can't justify buying either of them at this point. There's just way too much extension here. I've day traded gold a bunch the short side over the course of this month so far with pretty good success, but I've never swung it. I've only put on some intraday trades. Silver has been the one that I've been doing a lot more of, where I've been holding a core kind of like swing to the short side that I've been scaling out of into those moves into the ADMA and then kind of piecing back in on the way up, and have overall done a good job with my sizing, but it started to get away from me a little bit back here on January 14th. Yeah, I don't know. I want to say I still like the mean reversion trade on this silver, but this silver and gold were way too strong today compared to what I felt that they should have been, given that the market was up and given that we calmed down some of the geopolitical stuff yesterday. My expectation today, last night, was that gold and silver were going to be down today and that the market was going to be up. And it was just going to be a continuation of what we saw yesterday afternoon when we saw the metals weaken because they're a defensive trade. And again, geopolitical concerns were reduced by Trump yesterday. And in the same tone that should make the market move higher. Instead, what we got was both. We got the market higher and we had the metals higher at the same time, which was not my expectation. And I would actually say that that's extremely bullish for these metals. They should have been weak today, and they made new highs, new all-time highs, at least in the ETFs. So I would actually argue that that's extremely bullish. I still can't justify suggesting that you should be chasing the price here to the upside, because I think that's exactly what you're doing if you're buying gold and silver now. They're extended. The move has been getting a little bit silly. But while I can't justify the long, I would be very nervous to be short this stuff right now, which I am. Again, luckily I've been trying to keep my sizing somewhat in check on this stuff. But today, honestly, was the first real signal that we might go higher. I thought, and again, I know you asked about gold, but I've been more focused on silver, so I've got better information there because it's what I've been trading. I thought that January 14th through the 16th, once we kind of established this range, I thought that silver was going to be done going up. I didn't necessarily think it was going to crash down, but I thought it was going to be, maybe more of like sideways or a little bit of a grind up, not like a continuation of the acceleration, and that's starting to prove wrong. Initially, it was proven wrong just because of what happened over the weekend with the geopolitical stuff, But again, now that that stuff has calmed down, silver and gold should have been down today and they weren't. So to me, that's very bullish. When something should do something and it doesn't, a lot of times that's really a big signal it's going to continue in the other way. So we'll see how this trade pans out over the course of the next couple of days. FXA is the Australian dollar. Yeah, this is moving, this Australian dollar. Look at that FXA. Big move there. Nat gas reversed. Today, or is that after hours? No, today. Yeah, that was intraday today. Yeah, nat gas can be crazy. Like those three gap ups in a row that had, that happens in nat gas. That's a wild commodity. You got to be really careful if you trade that thing for anything, especially anything more than a day trade. I've had success in nat gas. I've had a couple times where I've gotten hurt. All right, folks. Anything else? What's Intel doing? Still above 50? Looks like it just retested 50. Like a handful of minutes ago. Went to 50.40, couldn't break it. See what happens when the after hours ADMA catches up a little bit on the 5-minute chart. But yeah, Intel is down, but in my opinion, it's holding up better than it should be. This isn't even to the ADMA on the daily. So we'll watch that, and we'll watch for the impact that it has on SMH and SOXX, which have been big focuses recently. Tomorrow, is it moving like SanDisk at all? No, right? No, SanDisk is not moving after hours. Micron is not moving after hours. It doesn't seem to be really moving anything else in the semiconductor space at all. Nothing. A little bit of a vacuum there. From Scott on coin. Crypto is dead. Crypto is dead. It's dead. Coin is dead. How did IBIT close today? Still above 50, so maybe it's not dead, just a little bit dead. Look, if IBIT loses this 50 to 51 support zone, which it shouldn't even be retesting, that's problem number one, but I guess it's technically still above it. If IBIT loses this 50, it's just done. There is nothing to do here in this collectible. I don't think you want to be involved in it. I am not a believer in crypto to begin with, but I'm a trader and I'll take things. And I liked this Bitcoin long into the beginning of the year. It called for a couple long trades on it. Called for the long trade back here on January 13th. This should not be down here retesting the support level again. And all that it's proving is that there is zero use case for cryptocurrencies except for possibly the black market. It is not digital gold. It's not digital gold. And that was the only use case that was left for crypto. There are aspects in 2025 of Bitcoin acting as digital gold. And I was saying it, I'll give credit where credit's due. I'm very open-minded to changing my mind on things if the market proves me wrong. And there were times in 2025 where Bitcoin and gold were moving together and it was acting like digital gold. Look at the performance of Bitcoin versus gold and silver now. It's not a currency. It's not digital gold. It's not a hedge. It's like a high beta NASDAQ if you want to be polite to it. And it is a worthless meme if you want to be not polite to it. I actually think that the best description of it comes not really from me. It comes from Aswak Damodaran, who is the guru of fundamentals, when he calls it a collectible. What are examples of other collectibles in the past? Beanie Babies, Pogs, Jim here saying pet rocks. That's the value of cryptocurrency. I would not own this for anything. That's not to say, and I've said this from the beginning, I do think that there's value in blockchain, but I think that you can separate blockchain and cryptocurrencies. I don't think that they have to go hand in hand. There is some value in blockchain if it's used properly. I actually wish blockchain was being more widely adopted. I think that blockchain might be great for, voting, honestly. I think that could be a phenomenal use case for blockchain. but that doesn't benefit Bitcoin in any way. It's just completely it's for the black market, you know. If you want to do illicit things, crypto, and that's probably becoming even a lesser case for that, because now like they track everything, like they track your Coinbase account and stuff like that for the IRS and everything. So you know, that's it. But Saylor's not going to get carried out. He's not going to get carried out. MSTR will continue to go down if Bitcoin continues to go down. But I have been very bearish in MSTR in the past. I've caught some great down moves on this thing, particularly this peak back here in November 2024 was a phenomenal short trade. I've been mad at myself that I missed this move at the end of last year. I really should have been all over that. But in the periods of time where I was really trading this MSTR to the short side, I did a deep dive through information that was provided here into the VTF about, no, I don't think so. I took a hard look at, and believe me, I wish you were right. I took a very hard look at the structure of the debt and the language of the debt, and their debt is ironclad. The only time it could really impact, I think, MSTR is if Bitcoin went to like 5,000, which, you know, as bearish as you want to be on Bitcoin, it's not going to 5,000, not anytime soon. That's the only time that debt might have an actual problem. It was written so well by those lawyers. The thing that's insane to me is I don't know who buys the crap. I don't know who buys that debt. But one of the bigger risks to MSTR's price in general that, again, won't necessarily make the company go bankrupt. It won't force them to sell their Bitcoin. That's the biggest thing. Nothing will force them to sell the Bitcoin that they have. The biggest thing is that at a certain point, if people don't want to continue to buy that debt, they're not going to be able to buy more of it. That I think is like the bigger risk to them, is that they can't continue this, you know, average down scheme by issuing debt and buying more crypto with it and over and over and over again. Yeah, there's no yield to it. It's all convertible, and it's convertible at crazy prices. But you can't call it back either. If I remember correctly, it's been some months for sure since I did that deep dive. But the biggest highlight to me on doing that was how ironclad it was, and how it's not as simple as you know, getting below his average price on Bitcoin for him to be having the whole fund blow up and stuff like that. I wish it was as simple as that. If it was, that would be the that would be the kryptonite, I think, for all of Bitcoin, to be honest. Is if you know, me even saying this is useless because it's just not how it's built. But if it was a situation below Saylor's average price and then he's forced to begin to sell, he's got so much of it that could potentially be forced to sell, that would just create a knock-on effect that I think literally would probably be the end of cryptocurrency as we know it. But it's just not how it is. So me even saying that is useless. And when I was first originally shorting MSTR, I kind of thought it was that way. And then again, I did that deeper dive and unfortunately realized that it's not. Yeah, I mean, I'm just trying to keep people real on this. Like, I don't know, like, I got a buddy of mine who is so into crypto that it's like his entire 401k at this point, and retirement, and like 60% of his personal assets. And I'm just like, dude, what are you doing? Maybe just buy like a little bit of Apple stock, use an iPhone. Like every time you buy a new iPhone, like you pay yourself a little bit because you're benefiting the company that you own the shares of, because you actually own some of it. Like, you know, I just don't want them to end up in a really bad spot one day. But yeah, I don't even remember how that got brought up. From Tate, if you don't have time to do a full daily journal, what's the one thing you'd still write down, a takeaway, a mistake, or a goal for tomorrow? Well, that's a great question. I don't know if anybody ever asked me that one before. I probably would write down one lesson that I would want to take into the next day. If I didn't have time to do a full daily journal and I wanted to kind of just get one thing down, it would be like, what was the lesson from today that I need to remember to take in tomorrow? A lot of times it's going to be risk related. I need to remember for tomorrow to a lot of times it's not do X, Y, and Z. And then you've got that right in front of you for the next trading session when you're getting started again. Over in the YouTube again, ooh, lots of commentary here. What about the Ethereum network? Yeah, I mean, again, you know, I think that there is value in the networks, but I don't necessarily think that the value in the network translates into value for the cryptocurrency itself. The thing that's interesting about Ethereum is that, you know, I would want to be extra bearish on Ethereum because in theory the float can continue to increase forever, but with Bitcoin, the most bullish thing about Bitcoin to me is that there is this limited supply. But if you actually do some research on Ethereum, while in theory the float could continue to increase, and now we're getting a little bit above my pay grade, I think over the course of the last like year or something like that, it's actually only decreased. So that's interesting to me, actually. I don't know the mechanics behind the specifics of why that is, but you know, maybe if the network is tied into the coin, and it's not, you can't just inflate the coins to infinity, that there could be some value in Ethereum when there's not for the others. It's me, you know, putting my half glass full hat on and trying to come up with a reason why there could be some value in some of this stuff. The people who bought the debt might be short Bitcoin as a hedge. Could be. What are the price targets for Palantir on your short? Are you looking for a bigger breakdown? It seems broken technically, but it doesn't go down. Yeah, Palantir's been very broken. Palantir's been very, very broken. And what's been most interesting about Palantir to me is that the things that traditionally, back when this was in this big up move, would get this thing to rip on an individual day, now stock don't even go up on it. Today's a perfect example. Palantir was up in the pre-market pretty decently, more so than the Qs were, and there was an analyst initiation or defense, I forget exactly what it was, on Palantir out this morning with a price target of like 204, I think, and a pretty bullish note in conjunction with it. I read the note, and when I read the details of the note, I was like, how are these people, like, they were making like a fundamental case, I think, on Palantir based on like 20, oh no, I'm confusing the RGTI upgrade, which was also ridiculous, which I am long, with the Palantir upgrade. I don't think I read the Palantir upgrade, but anyway, all the same, it had some sort of analyst defense this morning with like a $204 price target on it, and it was up more than the Qs were at pre-market. And then the second this thing opened, they just crushed it. They crushed it back down and was relatively weak in all day. This modern Palantir does not trade like the Palantir of old, and the CEO of the company, who is a complete jackass, pumps the stock while selling his own, and they have a massive amount of stock-based compensation that they give out with no buyback. So the float's continuing to increase over time. If anybody caught when I was on with JR yesterday in my Como, I kind of gave what I think is a great piece of advice, like for very general, very big picture stuff, on maybe more for investing than trading. But you know, if as a trader I take a top-down approach, so it still impacts my thought process from trading. And it was quite simply, when you look at a stock, is the flow set to increase or decrease over time? And I think that just based off of that, you can get a pretty good thought process on big picture if this is something that you are better off being long than short. And it's not a 100% truism by any means. Palantir being a perfect example of that, because the flow was increasing, you know, this entire way up, and the CEO was selling this entire way up. So it's not by any means a perfect example. But I think as a very, very general rule, if you're looking at a stock that is constantly increasing their float through stock-based compensation and secondary offerings, that's going to be heavy on the stock over time. Granted, a lot of times those stocks are the biggest growth stocks, so when growth is running, growth can have a hell of a lot of momentum and can continue higher. But like, one of the most mind-blowing statistics that I ever saw, and I don't remember what the numbers are specifically, so I would encourage everyone to look it up themselves, is when you look at Berkshire Hathaway's Apple stake and Warren Buffett's Apple stake. And again, I don't remember the exact numbers and exact dates, so what I'm about to say is not accurate numbers or accurate dates. So read it for yourself. But it's something like Berkshire stopped buying Apple stock for their own book in 2015, and they owned 3% of Apple. By 2019, they hadn't bought a single additional share of Apple, but then they owned 7% of it. How can you go from owning 3% of the company to 7% of the company without buying a single share? It's because there is less stock available because the company's been reducing the float through the largest, craziest buyback ever. And that's why, like, Apple can get a little expensive at times, and there can be times when I'm not particularly super bullish about Apple. I'm not particularly super bullish about Apple right now. But the fact of the matter is, any big enough of a dip in Apple, if you've got a big enough of a time frame, like investing time frame, you buy every dip in the stock, in my opinion. Because the float will just continue to decrease because they're a cash flowing machine. They're not doing crazy capex on AI like the other ones are, that might eventually impact the float, impact the buyback. And, it's going to continue to decrease over time. So I don't remember how I started talking about that, but I hope there was some good information in whatever I just said. Oh, we're talking about Palantir because you asked me about it. What is my my current target on Palantir is like 140, a little bit above 140. Yes, I'm long RGTI. I've been long RGTI for a surprisingly long time. Not a big position off this base here at the end of last year. I've just been going sideways, so I've been trading the range. I was long RGTI and QBTS at the same time. QBTS performed better. I think my target was 32. I got fully out of it, if I remember correctly. And RGTI never quite got there. I've been lowering my target over time and working this range. I have a very small long in that, but I've been trading it back and forth for some cash flow every day. Intel's still in its after hours kind of down wedge that it's building. The ADMA caught up. Yeah, Tom Lee would disagree with me, but he's talking his own book, so of course he is. I'm not. I have no position in anything crypto related. I am not talking my own book at all. Of course, Michael Saylor and Tom Lee are going to be bullish on crypto and will disagree with me. From Shoaib here, the Oracle's Apple Odyssey. They started buying in Q1 2016. They added Q4 2016. They added Q1 2017. Peak accumulation phase. Cool. This is cool. I'll take a look at it. I'll take a look at it after. Thanks, Shoaib. From Jim, I noticed a lot of your names trade in a range when you do your cash flow trades. Are these names you anticipate eventually making a bigger move, or do you prefer that they stay range bound for predictability? Both. So, if I'm long a name and I'm implementing my strategy, it's because I want it to go up. And if I'm short it, it's because I want it to go down. And that's what my expectation is. Similar to what I said with Intel. Like Intel, when I bought it, at 38 in the beginning of the year with a 43 target, I thought I was going to have a lot of time, or I was going to be working this thing back and forth. Intel's traditionally a slow mover, blah, 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 blah. But it just went. And that's fine too, because I made my money and then I got out of the way. But if I could tell stocks what to do, my ideal situation for almost any trade that I take is honestly for it to go sideways for a long time and then work. That's when I'll make the most amount of money. So both. I'm in them because I'm anticipating the move, but I'm happy for them to stay range bound. On a trade like SanDisk, are you using a dollar amount for a stop? No, I don't have a stop. I don't have a stop. I don't really use stops very often, only on some minor day trades. It's one of those things, you hear me talk about it a lot. It's very hard for me sometimes, given what my role is here and how many people with different account sizes and everything are listening to me, to balance what I do versus what I think the right thing for most people to do is. I think that the right thing for most people to do is to trade with stops, especially for new traders, because you can get very defined risk. For me, I will still sometimes do that on like an occasional day trade or something like that. I'll just have an old-fashioned simple trade with a stop loss. It's not really what I do. If trades go against me, I focus on working the position and working out of the position over time. What makes my approach very difficult is that you can't perfectly define the risk. So you have to kind of have deepish enough pockets to be able to afford a risk number that's going to be more of a generality than a specific number. I generally know most likely what I will lose if my trade doesn't work and I have to work my way out of it, but I can't give you a dollar number on it. So it's more about the game plan of me saying where am I wrong and then adjusting to the game plan of kind of reducing and working my way out of it a little bit over time is really what it's about for me. Just since you're asking specifically about my SanDisk trade this morning. Apple has spent over $700 billion in buybacks. Absolutely incredible. Yeah, $700 billion. Eventually, they're going to cross $1 trillion mark in terms of buybacks. When do you keep a trailer on to have unlimited reward? Sometimes just with my last piece, or my last percentage after the rest of the trade is worked out, which is what I did with SanDisk today. I'll read the rest of what you said, but basically, SanDisk today, I was out of like the vast majority of my SanDisk by 480, and then I just kept like a smaller trailer on that was meant to be exactly that in case this thing wanted to get decimated down to the 80 MA on the daily. So that was that. And I still have it on as like a feeler, and that maybe I'll either stop myself out of it at a certain point soon because it's so small, or I'll re-engage the trade at a certain point. Like you've talked about versus sitting at target and getting all out. Yeah, I have been doing more of setting a target and getting all out because I think that works well in conjunction with kind of the cash flow strategy that I really like to focus on. But sometimes I do a kind of combination of both, which is what I did today with SanDisk. I think you can do a combination of having that target where you are out of the vast majority of it and then keeping a smaller percentage for that bigger move. I should do a better job with that. I'll see the rest of your question, which is about to be the example that I just took. Intel is an example. Do I have any regrets? No, I don't have any regrets because I had a game plan and I followed it, and I never have regrets when I follow my game plans. But the question is, the real question is, could I have had a better game plan that then made for me to hold a small percentage as a trailer for the unlimited reward side? And that I could have done a better job of with Intel. So appreciate the question. Hope that helps. All right, gang. I'm going to wrap it up there a little bit after 5 o'clock. Have a great night, everybody. See you all tomorrow. If you're in the YouTube, give me the thumbs up.